Today is Thursday, February 8th, and we are back for another episode of Benzinga Powerball. Happy Thursday. What a wild Wednesday. We had a nice wild winner yesterday.
We did.
We did. I would say we called it quite well yesterday. This is your rapid fire show where you have one, a disaster of the day, second, a wild winner, third, a hot pick, and last but not least, we take care of your money and your body with the workout of the day.
All right, Luke. Well, let's get into it. There's there's some kind of small disasters out there, but I'd say one major one out there for a bigger tech company. What are we looking at for our disaster of the day?
I don't see it in the chat yet. Disaster of the day is, in fact, PayPal, ticker PYPL. Again, ticker PYPL. Not a stock that we've talked about for a little while here. Here's the story. PayPal is a value trap. You look at the ratios, the stock looks really cheap. You got a PE of 11 versus 25 in the S&P 500 average. You got an EV to EBITDA of 8.5 versus 12 average in the S&P 500. Stock looks cheap, looks like a 50%er, maybe a full two-bagger.
Yeah.
But we're looking at a seventh consecutive quarter of revenue declines on PayPal. Tough one. It was an important earnings report last night with the stock being as cheap as it is now. It's been slowly selling off. We wanted to see revenue turn around. If revenue turned around, if it was flat, if it was up, would have meant great things for PayPal. It would have meant good things for a pick. But alas, another tough quarter of revenue for PayPal. Stock is off 11%.
Yeah, and I mean, anyone with half a brain looking at the numbers heading into the report, could have told you that this stock was probably going to trade lower after. And so it was a pretty obvious trade. And that brings us to our wild winner, which also, I mean, we talked about it being probably the most obvious trade of the year so far. Granted, we're only in February, so less than 6 weeks into the year.
All right, I want to ask this one to the chat. ARM. If you missed the ARM trade, put a 1 in the chat. If not, put a 2. If you were on it, put a 2. If you missed it, put a 1.
Armchair. If you were on the armchair, sitting back in the armchair and didn't get any ARM shares, put a 1 in the chat. What? You didn't like that?
No, it's a little rough.
Okay, we'll workshop that a little bit. But all right, your wild winner of the day is, of course, ARM. Stock at this point is up nearly 60% after blowing earnings out of the water and offering strong.
Is it up?
It is up $44.50. It is now trading at around $122 a share. And this ain't no small company. This is a $124 billion market cap. I think that's with today's gain built in there. So you're talking about like $40 billion worth of market cap added to this company overnight from the earnings. And again, we're saying it's an obvious trade because looking at any other chip stock, whether you're talking NVIDIA, AMD, etc., has been up, already had this run up. ARM was a little bit more subdued compared to those other chip names, but just based on the demand right now for chips, it should have been pretty obvious that ARM was going to have some good things to say about its business going forward.
So here's the question, AB. Every chip maker has gone wild after earnings. We're talking double-digit percents, every single one, several 50% gainers. Are there other chip stocks that are left to report?
I don't know about report, but what's interesting to me is that Taiwan Semi, I think it finally
That's what I was just thinking.
Back at all-time highs, but no, it's still not at all-time highs. So Taiwan Semi, the one that's actually manufacturing and producing these chips for all these different companies, NVIDIA makes the technology and designs the technology, but then they send that to Taiwan Semi to actually manufacture the chips. Now, there is a risk that we're onshoring some of that manufacturing here and other places, diversifying away from Taiwan in order to avoid that China risk. And
Taiwan did report on looks like, let's see here, did report on January 18th.
Got it. Well, I'm just about share price wise. It is interesting, at least interesting that this stock is not at all-time highs or in fact hasn't ran, it isn't double in price like all these other chip names are. Jay Rice in the chat saying Marvel looks good as well. Looks like Tajal said they missed the trade. I mean, it's okay if you missed it. We love Luke. I mentioned this on pre-market prep. What would have been a really good sign in hindsight that ARM has very strong technology?
Marvel to report.
Oh, Marvel to report.
March 7th.
March 7th. And that's after NVIDIA, which I believe is the 21st. So there you go. That's another one that hasn't reported in NVIDIA on the 21st, I believe. So Luke, my question, in hindsight, do you know what would have been a good sign that ARM has pretty, strong technology out, and is a good company?
What would the sign have been?
That Nvidia tried to purchase ARM back in 2021 for $40 billion, and that got shut down over antitrust issues. But I mean, if you have the leader in the space, Nvidia, trying to buy it, it probably means that they've got some good tech there.
It's a good one. All right, Luke. All right. Everyone's favorite segment, clipping it over to the hot pick. It's not a stock that I own, but a stock that I think is interesting. It's a stock that I'm a customer of. The company is called Fastly, ticker FSLY. Again, Fastly, ticker FSLY. I'll tell you this. We built the basket before. We also do it again. If you take all the SaaS vendors that Benzinga is a customer of, there is significant outperformance versus SPY, significant outperformance versus QQQ, and Fastly is one of those stocks that Benzinga is a vendor of. Why is it on the radar today? You've got a nice 7% run, not really on news. You got a 13D that came out. That's a reported material ownership by a hedge fund. But again, you got the stock that's up 7% today, nearing all-time highs. It's a little place where I think we could see some breakout in the stock. What does the company do? It is a SaaS infrastructure play. It helps websites, big websites, like Benzinga.com is a pretty big website. It helps websites load content on their sites more quickly, i.e. the name Fastly. We're talking about a company that has several consecutive quarters of revenue growth. It's up 18%. Sales are on a year-over-year basis. That may not sound like a crazy number to you, but I promise you that is very sticky revenue. It's revenue that's not going away. It's high multiple revenue. Stock is not exactly cheap. It's not exactly expensive. It's not crazy. It's trading about 5 times forward price to sales. It's a little on the high side, but it's not nuts. Talking about a company that's doing 18% year-over-year B2B SaaS revenue. And the kicker on this one is that it is planning to turn EBITDA positive this year. We're talking about a company that hasn't been profitable, a company that hasn't generated EBITDA. We are expecting the company to generate EBITDA this year. And for those reasons, Fastly is your hot pick of the day. In the chat, tell me if you own this one. Tell me if you like this one, where the feedback is. I don't yet. I think it gets interesting if it breaks out to those all-time highs, and that's what I'm going to be looking for.
Boom, baby. Well, Luke, before we let our very wonderful and good-looking audience on with the rest of their day, let's get them a little buff. Let's give them some tips to help them get in the gym, get that swimsuit bod looking right before the summer, or whatever your goals are. Like, some people might be trying to gain weight, some people might be trying to lose weight. What's our workout tip of the day?
All right, workout of the day. Again, we're not just taking care of your wallet, we're also taking care of your body on our rapid fire format show. We're going to call this one the goblet squat.
Ooh, I like this.
You like that one? It's
Yeah.
a good name. All you need is a dumbbell in your legs. That is it. We're talking lower body. If you want to burn a ton of calories while you're in the gym, it's not going to be from training chest. It's not going to be from training arms. It's going to be from training legs. So what you're going to do is you're going to take a dumbbell, start with 25 pounds. You are going to hold it under your chin, and you're just going to squat down as low as you can go.
Got it. And what's the benefit
times.
of keeping the weight in front of you while squatting versus, I mean, a lot of times you see people squatting with the bar on their
It's less intimidating. It's easy to get started.
Yep.
If you can only do 2, you can only do 2. If you can do 20, do the full 20.
And you can do that with a kettlebell or something else too, but a dumbbell works just as well. And that pretty much every single gym ever will have dumbbells. So there you go. Goblet squat. Get those quads and legs looking nice. Thank you for tuning into the Powerball. We will be back with more hot picks, wild winners, and workout tips every single day at noon Eastern.